Hey everybody, Preston Bryn here with our Trader User Group Weekly Roundup. This is for the week ending October the 10th, 2014. Well, we certainly had a very interesting week this week. We've had a lot of volatility. Volatility came back into the market big time this past week. The SPX, the cash index for the S&P 500 on Wednesday moved up almost 1.8%. It's one of the biggest single day up moves for the year. And then the very next day on Thursday, it gave up one of the largest moves for the day, for the entire year, at 2.9%. So you could say that this has been a very interesting week. I've got this up on this chart here on the screen. I've got the E-mini daily, and you can see this deep blue dash line down here. This was the opening price for the S&P 500 back in 2014. Now we're still above it. Well, we broke a couple of key areas. Um, If I zoom out a little bit on this daily chart, you can see this upsloping trend line. You can see as we've moved up, this was the opening price back in January 2nd of the first full trading day of 2014. We've only dipped below it once. That was in that big pullback that we had in March, April timeframe. But then we've been riding this uptrend for quite some time. We finally had our first key break right here just a few days ago. And we're now sitting on a key support zone. As you can see, this blue shaded area here is a key support zone. And we're also sitting on a 200 EMA. So if we zoom in on this a little bit, just to give you guys some perspective, you can see exactly where we're sitting right now and how momentum could carry us down below. But um, I, right now it's really a hard call. But I do believe we're going to see some buyers start to step in at this point right here. Although we've had some very hard down days. You can see that very hard up day I was telling you about on Wednesday when the markets moved up about 1.8% and then it gave it all back up the very next day. That's a very bearish sign. Sellers were definitely in control there. And then we broke that upsloping channel, which is the first time in the past almost 2 years. And then we're sitting right on the 200 EMA. And you can see the S1 support or our R1 level of resistance, first level of resistance, is going to be sitting at 1918. The 200 EMA is sitting almost right at 1900, just slightly below 1900, which is kind of where we found ourselves. We're right side of this zone right here. Now, should we give this up, we're probably going to come down and test the opening day price for the E-minis, which is 1837. And then the next natural support point is going to be around the natural 1800 level. So momentum is surely pushing us down. Now, I would not be surprised to have a bounce back up, maybe test the 1918, maybe a little bit higher, but then we're going to watch very closely to see if sellers step in. If they step in, and push this down, then we're clearly going to be going down and taking out the 200 again and coming down much lower. So that's a little bit about the E-minis. Now, the other one that I wanted to show you here that's really totally underperformed for the year is the Russell, small cap, mid cap. You can see here this deep dash blue line. It was the opening price for the Russell in 2014, sitting at 1156.10. You can see where we are now. So clearly we're in the hole on small cap and mid cap for the year 2014. We're down more than 10 points, 11, 12 points for the year on the Russell. And you know, we blew through a very key support zone. If I come in, let's step out for a week just to show you guys. If I step out for a week, you're going to see, looking at the weekly chart here, you know, just exactly how bad this is. You can see, of course, the opening price for the rut for the year, and we've just been constantly moving below the opening price. It's almost been a sine wave where we're up and down, up and down, up, and then we finally gave it up and we blew through this support zone down here. Next support point for the Russell is 1007, and then of course the magical barrier of 1000, which is a more psychological barrier for us. So I suspect that we may see this before we come back up and see moving north of this shaded area here. So the downward action in the Russell is quite clear. If we look at the Dow, it's the same way. The Dow just moved into negative territory on Friday this past week. Here's the weekly chart of the Dow. You can see right here the opening price of the Dow, 16,473 for 2014, and we just moved below it on Friday. Now we took out a key support upsloping trend line here on the Dow right in this area here. Now if we zoom in and we come in on the daily, you're going to see that as well. You're going to see on the daily, we just could not get it together back up here, and then we gave it up. We gave up the 50. We gave up the 200. We blew right below the 200, which was sitting just a shade north of where our opening price was in January 2nd of 2014. And this is where we're sitting right now. So momentum to me seems to indicate that we've got further downside action to go. I would not be surprised. Now, of course, this is going to be a key test area would be that pivot low right there on the Dow futures, which is at 16,208. We're sitting at 16,434. So we may come back up and test the subsloping trend line before moving back down, taking out the 200 and coming down. But clearly the momentum calls for further downside action. Now the one that's done the best is the NASDAQ. And if we look at the NASDAQ 100 mini futures, you can see right here this dashed blue line again is where we opened the year, 35, 75, 20, 75. And you can see right here that we are well north of that. So we've had a pretty good extension in NASDAQ, but we're now in a key support zone. We haven't broke this upsloping trend line. So we may stay in this area here. Now, should the market start come roaring back, I think NASDAQ is going to outperform some of the others. But obviously NASDAQ has underperformed the others as it's fallen down. On Friday, the NASDAQ futures fell 2.98%. That is compared to just 1.6% for the E-mini S&P 500 futures and for the Dow at 1% and the Russell at 1.9. So the NASDAQ gave it up the hardest. You can see this huge down move. Now I've been telling our members that when the markets finally fall, or if they do fall, you're going to see those that have been extended the most are going to fall the hardest. And I said that's probably going to be NASDAQ. So, in any down move, NASDAQ would be a more likely short candidate than, say, the Russell, because that's been down the hardest. And that's not to say it can go down any further, but the more likely shorting action would be held in the Russell. I mean, in the NASDAQ E-mini futures. The other thing that's really interesting is if we look at the volatility, you can see here. This huge move up in vol on Friday. You can see the spike. Vol moves and spikes here. And as I zoom out on this daily chart, you can see what I mean by this. Now we're here. This is the Friday action right here on the far right hand side of the chart. You can see when we move up in this rarefied territory, and we haven't seen this area since 2012, December of 2012. In fact, the end of December 2012 is when this happened, December 27th. And then, starting off the new year, volatility just fell very hard. Every time we've spiked up here, volatility's fallen hard. So what I did is just took out, I took some puts out in VXX. I think the higher probability trade is for this to fall down a little bit. And then, we might be able to recover some. But I think the more likely event for volatility is to come in, which means we may get a little bit of a reflex bounce sometime Monday or Tuesday of next week. If we open down on Monday and then it reverses and goes up, that would be a good sign. That would be a more bullish sign. If we open up on Monday and then we reverse down, then of course that would be a more bearish sign. I think the momentum may have us opening down, but we'll see Sunday night when the markets open. The other one that's just through the roof is bonds. And if I just zoom in on bonds right here, you're going to see just how strong this bond move is. I mean, this is a V. You don't see this kind of bottom very often. But this thing just came all the way down, boom, and then bounced right back up again. Very interesting move here in the bond market. And we're coming back up to the annual highs for bonds, which were made in August 28th, 29th, annual highs. We're almost hitting that right now. So again, everybody knows interest rates are going to go up. They don't know the timing of the interest rates, but what I keep telling my members is that it's a global market now, and what's propping bonds up more than anything else, we got a lot of money coming in from Europe and from China, because bond prices over there, government securities over there, you can pick them up for under 1%. And if you had a choice of investing in U.S. Treasuries for about 2.3%, 2.4%, or let's say German bonds for 0.8%, what are you going to do? Even though Germany is a fairly safe country, you're going to probably put them in U.S. Treasuries and get double the percentage point. So you've got a lot of money flowing into the U.S. Bond market, which is kind of to the chagrin of the Feds and everybody else, is keeping interest rates a lot higher than people thought for a lot longer. But they will give it up, folks, and when they do, you're going to hear a giant sucking sound, and that's going to be all the money coming out of bonds. So with this kind of hard move up like this, I've entered a couple of credit spreads in the bond futures market in the options world, just looking for a little bit of a pullback or kind of a consolidation in this area. If it pulls back or consolidates in this area, I'll be happy. And then, of course, in the currencies market, we've got the U.S. dollar, and the U.S. dollar has been on a tear. We've ridden this up. Most of this right here, we've been long the dollar. We got out with this pullback here. We pulled right back to the shaded zone, and then notice it's now starting to take back off again. So that's an area where, for an entry point for folks that hadn't been in the dollar, this would make some sense for me for the U.S. dollar. The other one that we're looking to go long in, but the timing is not right, is the pound. The pound started to move up. Again, this is a daily chart, but we've rolled right back over again. So the timing is not right in the pound. So we're going to hold off on that. The euro has just been totally trashed. You can see the euro futures here. We're right down at a key support point, this zone down here, this shaded zone. If I just back it out a little bit so that you can see this shaded zone, you can kind of see where, this has just provided good support. And this is where we're sitting right now. You can see this very huge rejection here at this downsloping trend line, and off we go. But we've got such a wide, you can see how just overextended the ADX is, which tells me there's a huge trend to the downside. That means there's so much momentum in this trend that I suspect any kind of rally here is probably going to be shorted in the euro. And as you can see, as I blow this up right here, you can see how the euro started to move up, but then bam, sellers just jumped right back in again. We had the 5,200 cross back here in July. So I think this is going to continue to see either neutral to downward action in the euro. There's also talk that Draghi may have to do something, because if a recession starts to set back in Germany or some of the other bigger markets in Europe, and then stagflation jumps in or deflation jumps in, they're in trouble. So I think Draghi's going to have a lot of things to do here stimulus-wise over the next 90 days, and I think we're going to get something out of it. Now, the other thing I wanted to show you here is in the gold market. Gold's been kind of up and around center line. We're in this shaded zone, which is just a very wide from 1180 to 1240 support zone for gold. If I put it on a weekly chart just to give you some perspective and show you what it looks like, you can see this support zone right here for gold. It's a very tough nut to crack for gold to get us back down to 1,000. I think right now, until we break that, I'm just trading. I've got a credit spread. Actually, I've got an iron condor on in gold where I'm just playing the futures market. Then I'm playing for a longer term consolidation here until we break one way or the other. The odds favor a break to the downside, but I don't see it happening anytime soon. Every time we come down to the lower end of this trading band or zone, prices are shoved back up. So that's a little bit about gold. The other one that I had a trade on is silver. Silver is just being decimated, but you can see with silver right in this zone down here. For me, I like this area here in silver, so I'm doing a spread on in silver the same way. So if I can come in here like this, again, this is a weekly chart, so I may just come in here and set a wide zone like this. Let me just come down in this area here and just kind of draw a support zone right here for silver. You can see right in that area right there. It's a little bit wide, but sometimes prices don't adhere to a specific area but into a zone. And then if I come into the daily chart here, you'll see just kind of where we are when I blow this thing up, where we are in the zone. We're towards the lower part of the zone right here. And that zone goes anywhere from about 15 to 19, so about a 4-point zone. So in this kind of a no man's land in here, which you can trade a stabilization or a consolidation period here. So I think that's kind of where we are with the metals market. Energy and oil. Well, oil kind of had it right in the market. Look at oil here. Let's jump back out to the weekly here. You're going to see a symmetrical triangle in oil. Um, and every time we got to the top, buyers pushed it down. We got to the bottom, sellers or buyers pushed it up at the bottom, sellers pushed it down. We finally gave it up this past week. This is a weekly chart, and then boom, we blew right through the 8709, and we're testing a key support point right here, right at that area right there. That's what we're testing right now. And then the very next one down is 7728. Now, oil would tend to, this kind of move down would tend to showcase that oil is anticipating global slowdown across all countries, which makes sense. So oil is giving it up, but we've had such a huge move down on this weekly chart. You can see a wide separation in the DI plus and the DI minus, which is very unusual on a weekly chart. We zoom in on the daily, you can see a little bit of the same separation, but we're getting that support at that 84.57 level. So I wouldn't be surprised to see a little bit of a counter trend move back up, but then I think oil is going to get shoved right back down again. Gasoline, if you guys have been to the pumps recently, you know gasoline is giving it up dramatically. You can see, let's just jump back out to the weekly so you can get some perspective on the gas chart. But you can see gasoline broke a key area. And we're sitting in this very wide zone here, but you can see this first breakup right here, and then boom, it runs. We'll probably come up and do a retest, but the momentum still favors the downside in gas. Okay, so that's a little bit about gas. The one I want to show you here, a couple of ratio charts that I think make some sense. If you look at the Russell to the spiders, you can see the huge underperformance the Russell has had to the spiders. Now this is a weekly chart, but let's put it on the daily just to really show you how bad this thing is. Now because it's been moving down, that shows you that the Russell has been underperforming the spiders or the S&P just dramatically. It's just totally down. This would be small cap to large cap. And you can see the spiders have done very well. Another one that's kind of come unglued is transportation. If we look at the transportation sector, you know, starting right around the first part of October, transportation just gave it all up in relation to the spiders or the S&P 500. Total unperformed. Some of it might have been the Obama, Ebola. I can't talk today, guys. There's a nice support point there, but the Ebola crisis has probably put a dent in some of the airlines, but I think we're going to get a bounce in this. We got a very wide separation in the DI minus and the DI plus. So to me, this would show that transportation a little bit overdone. The other one is, let's take a look at the consumer staples to the S&P 500. Look at this here, guys. This is consumer staples. Those are the safety stocks. When the markets are in stress, money flows to staples. Look at how money flowed to staples here. It's a daily chart. Starting, you know, really it kind of started in earnest right around September. Money slowly started going into safety kind of plays. Some that have done very well are Coca-Cola and Pepsi. Even though they're international players, they've done very well. But anything in the consumer staples sector has done well, comparable to the S&P 500. And the one that's done really poorly is the consumer discretionary. I mean, the consumer discretionary has just been totally performing very bad. If we look at and I'll just put the discretionary on here too. That would be the XLY sector to the spiders. And if we look at that, you'll see here discretionary is moving down in relation to the S&P. So that is a normal move in times of stress. Now here's the other one. Look at this one. Here's energy. You can see energy has been totally underperforming the S&P, and again it started back in June. Starting in the summer, the energy market in comparison to the S&P 500, total underperformance here. Now as you guys know, things don't go down hard like that forever when you're looking at comparables and you're looking at sectors. I do believe we're going to eventually have a move back up to test this area right here, but not right now. So net, folks, we've got a strong down move this past week. The momentum may carry us down. Look for any rallies. We're going to check to see if there's anybody selling on rallies. The key points that I'm going to bring up with our members in our Sunday night session will be the key support and resistance points. Right now, I'm calling it 1918.25 to the north, and then roughly about 1886 to the south. We take 1886 out to the south, we're going down to 1837. Not a straight shot. We may have a couple of up moves, but I think the rallies are going to be sold, and then we're going to end up down in this area down there, and that will give us um, close to a 10% pullback from the highs. The 1800 level, almost even 1800 roughly, will give us our 10% pullback from the highs, which we haven't had, by the way, in 35 months or 36 months going on. All right, everybody, that is pretty much kind of where we're sitting here. I hope you enjoyed our session. I will see our members Sunday night. And for those of you that are not members, we got a couple of cool announcements coming out very soon, so stay tuned. I think you'll be happy with what you see. Have a good one, everybody. Bye now.